All right, welcome everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Tuesday evening, the 11th of August. Just to let you know, due to circumstances beyond our control, next week your Monday evening commentary will be emailed to you Sunday evening. I'm going to try to do a Tuesday live, and Thursday we are probably just canceling it. So just as a heads up, we're going to make some changes into next week. In all honesty, we're trying to spend some time with family now and trying to, what is it? Keith has a Thursday and Jeff's unavailable, so we're just going to do what we can. But little excited. Okay, I'm very excited. Let's be honest with you. Pretty neat trade that we came up with the help of Dr. Gupta. Babu Gupta made a comment to me, and I looked at his trade and I thought, you got to be kidding. I'm going to be greedy. I want more upside. So taking a quick look, he was asking if we could jump into JP Morgan. And my thought process was, well, I've got some people in it, and I've got some just want the stock, some that have let me really be excited to just let the stock run. Some that said, you know what, we probably need some covered calls on. I've got 400 shares going to be called out here in the near future that I'm going to reinvest this trade into that account. And I'm rather excited. I'm rather excited to get a stock that right now, as of today, just broke above their long-term, and I don't know how they drew this line, but had broke above their long-term resistance trend line and have an opening trend line up to the 130s when they traded as high as 140 before all the COVID. Excellent earnings last time around. We're not really rewarded. I have all of the information for JP Morgan when you're looking at a bank. This is a best in breed. It's not as diversified as a Bank of America, but I mean, let's take a look at some of the things that I really like. Income, 23 billion on 76 billion in sales. When you go to your operating margins, there you go. Profit margin coincides with that they're at a 30% profit margin. Love it. One of the highest book per share values, one of the highest cash per share values. They're perfect. I mean, by way of risk, very little risk that I see. They do have a high debt to equity. Kevin, anything above $1 is not good. Well, unless you're a finance, unless you're lending money, a high debt to equity ratio is good. Unless you're Bear Stearns, where it's like, what, it was almost, I'm pretty sure it was $3.6 debt to equity. For $1, they make that pay out $3.60. Kind of interesting that I think they were frozen at $3.65. They do pay a dividend. I like their earnings for next year. I like their earnings for next quarter. A good increase. Sales are down. I would expect that. I can let that go. I don't like that they're only owned 0.1% and that they sold off a bunch of their positions. That does bother me. But I like they're institutionally owned. I'm really not going to spend time on any of this because they're a bank. I like their operating margin. Their highs, they've got 26.42% to the upside. There's a lot that I like. There's a lot that as I look at them, I'm thinking, you know what? This has some opportunity. This will not have some opportunity if, well, let me take that back. Its opportunity will be limited if President Biden gets elected, or President, what do you call it? The president trying, if Biden gets elected for president, we'll probably have some more rules, some tightening on the banks. But that won't go into effect until at least after he's in office in the first quarter. So we have some opportunity. As we look at their chart, you can also see that they were in those 140s, 142 to start the year off. So there seems to be between 135 and 140 upside opportunity in JP Morgan. So if I was looking at my trade, I'm going to make up a name for it, but I'm going to call it the half and I'm going to call it the half and half trade. So there we go. I'm looking at the half and half trade so that I'm going to be good to go. So what is the half and half trade? Well, it was presented to me to do a leap deep in the money long call. And if we are looking at the position to be in there, I'm going to show you what I'm already in and what I want to get into. We were looking at the $50 leap in the money. Wow, I'm just looking that JP Morgan was up $3 and apparently they're up $4. That's not right. It's got to be that $3 too. $3 and yeah, that 4.05 is not correct. But we're looking at a January 22 $50 leap call, which right now would cost you a bid and ask 560. It looks like it's 54.22. I'm going to call it 54 and a quarter. So we're going to do a January 22 $50 long call. It will cost you a cost basis right now of 54.25. I'm going to say ish. So if you take a look at where I would do, half of your position is just a straight out leap long call. The neat thing about it is a $50 for a $54.25. I'm going to ask you, what is the intrinsic value? The in the money value. Kind of a neat question, right? If it's going to cost you $54.22 and the stock's trading at 103.82, you plain and simple take that 103.82, subtract the $50, and that gives you an in the money value of $53.82. That's the intrinsic value, right? So let me go ahead and write that again. 103.82 minus the 54.22 is equal to $53.80, which means the extrinsic value, the time value, right? 54.25 minus 53.80. Actually, let's take that back. It's, well, I guess it would be that, right? A whopping 45 cents. That's the time value. You bled out all that time value in your position. It's like owning the stock between now and January 22 for 45 cents. Now, something to pay attention to. Delta. That delta is, wow, it's 396 on 400. It's like 0.99, right? January 22, $50. Delta's 0.9902. For those that don't know, for every dollar the stock moves, your long call will move 99.02 cents. So I like it. Half of the trade is going to be a deep in the money leap long call because the stock can at least get up to 135 to 142, in my opinion, in the next year and 4 or 5 months, right? So that's the half the trade. The other half of the trade is a leap call calendar. Starting off with, again, an in the money long call, January 22, $50 strike price. So you have the right to buy the stock at $50, and it will most likely cost you $54.25. And then you're going to add a, which one did I do here? Did I do a, pretty sure I did it January, but I'm going to make sure so I don't mess it up. Yep, a January 21. I have 110s, 115s here. If I was to do this trade today, no questions asked, I would do a January 21, 115. So I'm going to do a short call, and it should be a bull call calendar. I would do a January 115. What I want is the credit. If I look at a January 15, it'd be $4.42.5. So I'm going to sell for $4.42.5 credit in the trade. Net cost basis, gonna maybe freak out a little bit. It's a little expensive. $54.25, dang it. $54.25 minus a $4.42 credit. For me, tells me it's going to cost me, as I'm putting it into my calculator so I don't make a mistake, it's going to cost me per contract $49.83. For one contract, it's going to cost you $4,883. It's rather expensive. The return, the reward, or the expected reward. I see two of you put questions in here. Give me just a second, and I'm going to work through it. But the reward, 115, have the right to sell at 50. That gives me roughly $65 minus your cost basis of $49.83. As I take a quick peek at this one, 65 minus 49.83. I'm looking at a profit potential of $15.17, or 1517 divided by 49.83. Or a return on investment of 30.44%. Kevin, why would you do both? Because in some way, shape, or form, JP Morgan is doing everything right. But Kevin, what about the trade spat with China? Again, it really doesn't matter. Why would I say that? I'd bring in JP Morgan. I'd put them out to 2 years. I'd update our chart. For crying out loud, it looked like the trade spat all through last year helped it go from $86 up to $135. I'm just looking for a retracement. That's it. I'm looking for a retracement on a bank that's a best of breed with a CEO that's second to none. So I want some leap calls in there that will cost me $5,425 for one leap call. If I'm going to do the other half, the leap bull call calendar, that I would expect will free up my money by January. Since to me, this is a rather expensive trade. I want to get back my profit. I want to get back the big returns here. I want to make $1,517 on a $4,983 investment. Why am I going out to January 21? I'm going out to January 21 because that gets us through Christmas. Not only does it get us through Christmas, but it also gets us through an earnings event in October. So the short answer is I want something that's going to be in the money, and hopefully in the money by quite a bit, so that I can, plain and simple, free up some money in January. Really, the in the money bull calls, the in the money bull puts, the credit spreads that you're just waiting for 30 days for it to expire worthless, this is taking a debit spread and literally having it act as a credit spread, and you're just waiting for it to go in the money, and then you're just being patient for it to expire to capture your profit. There is an individual who's here tonight. There are actually a couple of you that I currently have August 100 short calls on. It seemed like with your risk tolerance that we needed to have something on it. You weren't comfortable just letting it run. So this is now the position that I'd like to take to replace that money that next week when we have that August expiration, if JP Morgan is trading above 100, your shares are going to get called away, and we can now work on something for a little bit bigger return. And basically, I'm taking that money and turning it into a different trade that can net you a pretty substantial return. On the high side, I'm probably going to get out around 135 for those leap calls. If I do my calculations correct, we've got about $30 a profit. $30 a profit. $30 a profit against a cost basis of $54.25. 30 divided by 54.25 is a 55.29% return. And off to the races we're going to go. Now, what gives me this hope, right? What gives me this thought process? I'm looking at Apple, even though we had technically a horrific day. Apple kind of got crushed, right? Not too bad. But look at the day we had. Where's our chart on Apple? Brutal. From 47 down to 37. Pretty good loss today. The 313, that's off. It's probably 1313, I'd imagine. But what I like about it, what I like about it, I want to see more of these, plain and simple. I want to see more of these $47 turn into $142. I want to see more of the $41.50 turn into $150. $49.75 turn into $104. $43 turn into $163. That gets me excited. You know what really gets me excited? Probably not the fairest thing to say, but a couple of you that were willing to take some, some pretty good risk. We've got some at $8 that it turned into 109 by being capped. We have some of you at $2.69. That's going to turn into 119. Really, we're waiting for it to turn into 140. I want to be able to get you some of those kind of returns. Where I think it's going to happen next will probably be Boeing. We've seen Boeing up to 250-ish this year. This will be the next one. This will be the ones where we see some of these ones turn into 25 to 40. Some of these ones for 27 out to January 22 that we could literally see turn into 150. Some of the 330s at 14, January 22, I'm looking to see these at least turn into $40, where you're going to see roughly a 200% return. I'm not just picking numbers out of the air. I'm just using past resistance levels and support levels. That's it. That's all I'm doing. You can see the same thing with Disney. You can see the same thing with Facebook, Visa, Bank of America. Bank of America could very easily, August through December when it moves, go from $27 back up to $35. That would make these leap calls that are January 22 be at worth in that $10 to $12 range. A no-brainer. I've got 71 contracts for people here at $30 strike, January 22 leap calls. I like the position. 2 questions came in. So one half is for price appreciation, the other half is for income, right? Yes, if you want to call it quarterly income, August expiration is in a week and a half, so it's September, October, November, December. We're going to do a third of the year. September, October, November, December, January. We got 5 months. I don't know if you would really call it income, but yes, it's where I'm looking to have it get called out. I want to book that profit. I'm giving myself 5 months and a week and a half to do it. And then, yes, the other part is income. Does the calendar have to have the same strikes? No. And remember, it's a bull call calendar. Usually calendar, yes, does have the same strikes, different months. This one I'm calling a leap bull call calendar. So yes, Ida, a call calendar by itself, same strikes, different months. A bull call calendar, Abraham calls it a long diagonal. Either way is correct. But a bull call calendar, a long diagonal, a leap bull call calendar will have different strikes and different months. I was really excited as we sat and looked at it the other day. The Hurley Investments was like, well, instead of just creating income and getting called out about getting called out at the 110 or 115, dang it, we want to go long. We want to go long on a bank that is better than in my opinion, Bank of America. Doesn't have quite the same appreciation opportunity that Bank of America does, and it is much more expensive, but it's definitely the best of breed. It'll probably be the next one that you'll see Warren Buffett really throw some money in, because I know he's kind of disappointed in Wells Fargo, and US Bank Corp just doesn't have the same growth opportunity that JP Morgan does. So that is our trade. If you're looking to have some of these put into your accounts, do understand it's roughly about a $10,000 trade. So if it's one that you're looking at, plan on spending about $10,400 in your account. We'll want to make sure that it's not over leveraging your account. But this will be the trade that I'd be looking to put into some positions to try to make you guys some money. If you like it, if you want it, send me an email, send me a text, and we'll be in it. Jeff, Lance, and David W., you guys will all be in this automatically for your 4, 6, and 800 shares that you guys have. I'm going to work this accordingly to fill in for those share counts that I expect might be called away as early as next week. or this week. I can't remember if I have you for April 14th on those short calls or if I have you for, August 14th, or the monthlies at August 21. So just a heads up there, and so that you will, that you three will know that we're going to have you taken care of. Lee, I got it. I like it. We'll get this working for you as well. And that's a trade for today. Any questions, any comments? Maud, just as a heads up, I think you're here today, Maud. Where are you? There you are. In your small account for the option trades, this one will not work, but you're pretty much up in that $35,000 range now, or close to it. I haven't looked today. I'm sorry. So you're looking at 10K, or about a 40% return. I'm not sure that I would put this one in what you have as, hey, do some spread trades for me in there, but it might be shortly thereafter. All right, guys. Hey, pleasure being with you tonight. I've got a call I got to make right after this meeting. I will do that. Give me 2 minutes and I'll be on that call. Mod, not really where you take out all of the extrinsic value like that as we were going through it. But I am going to play the Bank of America for you in that one, just as a heads up, and do it a little bit differently there. All right, guys, good luck at it. I look forward to seeing you Thursday morning. And for my phone call I'm going to have here, give me 2 minutes and I'll be right on the phone with you. Guys, take care. Have a wonderful evening, and I look forward to seeing you Thursday morning. Bye-bye.